Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the pound dollar, the Great British Pound versus the US dollar. The date is 3/15 of 2020. If you want to stay up to date with all of our pound videos and other currency pair and commodity videos, make sure you subscribe to our channel. Alright, so we're looking at the weekly pound dollar chart, and dollar is strong. And really crushing the pound. We see one of the biggest weekly decline candles we've seen in years occur last week with a giant sell-off all the way down to the $1.22 mark, really pushing the pound down, propping up the US dollar. So our sentiment is obviously bearish, and the reason being why is because we have this historical triangle here. Okay, it's quite simply a triangle of price action where price behaved, and we see that price, after finding support here for many years, we see price just closed the candle quite thoroughly closed below that line. When we think about candles, it really matters where the body closes, so it kind of crashed right through that line and closed well below it, meaning that it is unlikely price will come back above this line anytime soon. Now, we could see a retrace, and let's talk about that. This week does have some retrace potential. Let's go ahead. I'm going to look at the parallel trend channel. Let's set that up. Then we're going to apply our pivot points. So if we were to take a parallel match of a trend line to our initial sloping downtrend, we'll see that here price historically has moved right along this line. Above or below, it honors this line throughout time. So if we think about, now when I think about the retrace, is because this fast moving average price is moving well ahead of it. Now whenever it does that, doesn't mean it won't continue falling, but sometimes we'll see a very quick retrace before the next big sell-off. So here we think about price potentially coming back all the way to this 25.50 line. Let's go ahead and apply our pivot points. So pivot is at 25.79. So 25.79. And let's go ahead and zoom into our daily for this. Okay. Very big, obviously, bearish daily candles there. There, 25.79. Now let's see, R1 is at 128.98. Okay, so right there is R1, meaning price could come up all the way, slap all the way back. And with a pound, it really wouldn't surprise me if it happened. But it just means potentially price could come all the way back to this line before the next big sell-off, if it felt like it. To put it quite simply, this moving average is way up here, so if the pound were to snap back like that, it really wouldn't be that much of a surprise, though that would, we'd start looking into the question of price action then. So potential on there, R2, 135.19. So that's our last high. So R2's all the way up there. And we really wouldn't worry about that until we saw price crashing through R1. If price were to close above that, then we actually turn our attention to R2. But for now, price is well below the pivot and the R1, meaning it's a higher probability that price will stay below this price action zone here, 25.77 to 26.38. Okay, so let's look at our first support, 1958. 958. Right there. That's our last low. All the way back from September of 2019 is our first support. Wow. So big zone, and definitely, I'm not going to be buying anything right now, that's for sure. I want to wait for a pullback and then sell again. I'm a little bit leery of selling right here because once again, even the daily, like we talked about the weekly, price is moving well above this fast moving average. And historically, whenever that happens, price will want to slap back eventually. We see it back here, moves away, then comes back up. So just make sure you don't get caught selling at the very bottom before price comes back up. You want to wait for that retrace, then sell. If we were to see support 1 at 1958 broken, our next support, weekly support, would be 1.1639, which is all the way down here. S2. Right? So right there. Okay. Well, look for the retrace. Okay, let's go ahead. Last thing before we close up this session. Let's look at the 4-hour and think about if price were to retrace, where would the most likely retracement point be? And let's do that. Use a Fibonacci tool. Now here's the thing: if price continues lower, if the candle continues lower, then it blows the Fibonacci measurements because you have to go from recent high to recent low. So this is an if, quotation marks, if price were to retrace here, we could see it most likely first place target scenario would be around the pivot point at the $1.2577. The 126.23 would be our 38.2 retracement, which is this last high. And we can see price sometimes do that, kind of go sideways, and then would have a range. But first, this would have to be a proven bottom, so don't try and buy the bottom. Whenever you think it's the bottom, or you think it's the top, it's probably not, so don't buy it thinking that trend's going to turn around. Wait for price to prove itself with a daily candle, or whatever candle, 4-hour, daily, 1 hour you're looking at, needs to envelop or be larger than the previous in a bullish fashion. So until then, please don't, because you trying to guess the bottom and the top is the surest way to lose pips. Okay, I wish you all good luck this week. Stay strong out there, and we will talk soon.